actually think there's a reasonable chance we saw the bottom last week at 60,000. There's a couple of reasons for that.
I'm buying.
Just buying?
I'm pumped.
Okay.
I didn't think I was going to get another at bat like this.
Bitcoin is starting to emerge as an asset that can be used as...
In just the last 24 hours, the crypto world has exploded with major updates. One of the biggest headlines came from financial powerhouse Goldman Sachs. They officially revealed that they are holding billions of dollars in crypto assets. This information came from their latest quarterly 13F filing. According to their Q4 disclosure, crypto now makes up about 0.33% of their total assets. At first glance, that number might seem small. But when you're talking about a financial giant of that size, even a fraction of a percent represents billions. Now the real question is this. Over the next 10 years, does that percentage grow larger or shrink back down? Will crypto become a bigger piece of their portfolio? Or is this just a cautious experiment that never fully scales, and it doesn't stop there? Will more banks follow their lead in the coming decade? Or will traditional institutions stay hesitant and sit on the sidelines? Some believe this is only the beginning. The idea is that we are still in the early stages of institutional adoption. If that's true, what we're seeing right now could be just the first step in a much larger shift. And if history has taught us anything, it's that once major institutions start allocating capital, momentum tends to build from there.
Can we talk about this right now? Should we be panicked or no?
I'm buying.
Just buying?
I'm pumped.
Okay.
I didn't think I was going to get another at bat like this.
Can I tell you that last time when it dipped, like, I said, let me pick up another, and I didn't.
Yeah.
We thinking about like the little...
I'm buying.
Yeah. So
but by the way, everyone who's listening, not financial advice. I've worked 40 years to be able to afford to take the risk. Yeah. I don't see it as that much of a risk anymore. I think the world will only get more tech-oriented, not less. I think that the cynicism against, governments and dollars will continue to grow. I'm shocked we get another bite at the apple at this level. I never thought I would buy it under 70.
Is putting 40% of your portfolio into Bitcoin a smart move or just plain crazy? Some big names are saying yes, but let's be real. That's a huge commitment for most of us. A more sensible approach might be dollar cost averaging. Instead of going all in, you invest a fixed amount regularly, say every week or month. This smooths out the bumps from all the market volatility. The big question on everyone's mind is, have we hit the bottom, or is another big drop on the way? Nobody knows for sure, but sticking to a consistent strategy can help you navigate these uncertain times. What's your Bitcoin strategy? Let me know in the comments. Thanks for watching.
This $60,000 is the cash production cost for...
Here's something most investors don't realize. Bitcoin has historically never dropped below its production cost. And when we talk about production cost, we're talking about electricity. Specifically, the amount of power it takes for a miner to create one single Bitcoin. Mining is not magic. It requires massive energy, hardware, and operational expenses. So there is a real, measurable cost behind every coin that comes into existence. And historically, the market price has respected that floor.
The Bitcoin community that believe that there is a floor on Bitcoin at around $60,000 because that is the average price that is effectively or cost, I should say.
Now keep in mind, electricity costs are never the same for every miner. It all depends on where they are located in the world. Some miners operate in regions with cheap power, others pay significantly higher rates just to keep their machines running, so the true mining cost is always a range, not a fixed number. But right now, the average cost to produce one Bitcoin is sitting just under $60,000. That number alone changes the way you look at the current price, because it forces you to ask whether the market is trading above or below real production value. Some major investors have already shared their views on this. Let's take a look at their perspectives and then break down what it could mean.
I teased it. You have a number in mind. What is it?
I actually think there's a reasonable chance we saw the bottom last week at 60,000. There's a couple of reasons for that. First and foremost, $60,000 is the cash production cost for a new Bitcoin.
Okay.
So what happens is when you get below that, the weak miners start going out of business, they shut down, and they're the main source of marginal selling pressure. So when the weak hands are out, okay, you have a less selling pressure and it's likely to put in a bottom. The second reason is Bitcoin trades on global liquidity. And if you look at when it peaked in the fall, it just so happened to be the exact same time that the Fed noticed huge stresses in short-term funding markets that effectively created an entire 180 on monetary policy. So if you look at what the Fed was doing in the fall, they were allowing $50 billion a month to go off of their balance sheet, just drain away. Now, what happened in December? They did a complete 180 on that. And what they're doing is buying $40 billion net a month. So you've seen a net swing in liquidity from the world's largest liquidity provider to the tune of $90 billion a month. So you have this huge floor of liquidity, right, that just came in. You've got the cash production costs there. And there's another technical element here, which is if you look at historical bottoms in Bitcoin, they've often happened when the percent of the supply in loss exceeds the percent of the supply in profit. And 60,000 is right around where that happens. So you have a whole bunch.
The so-called electrical floor price of Bitcoin sounds powerful, but it does not guarantee anything. It is a useful metric, but it is not some magical safety net. The reason Bitcoin has rarely traded below its production cost is simple. That cost constantly adjusts. It is not fixed. Back in December, the estimated production floor was around $71,000. And yes, the market price moved below that level. Why? Because the average mining cost later adjusted down to around $58,000. That adjustment is not a flaw. It is actually how the system was designed to work. Bitcoin's code automatically responds to changes in the network. This is built directly into its DNA. If we look at the total hash rate since Bitcoin was created, the growth is unbelievable. Over the past 15 years, it has become the most powerful computing network on the planet. The amount of processing power securing Bitcoin has exploded. But if we zoom into just the last 3 years, the picture changes slightly. In recent months, the hash rate has dropped noticeably. Mining difficulty even decreased by about 11%, which is the biggest downward adjustment since 2021. So what does that actually mean for you as an investor? When mining difficulty drops, Bitcoin becomes easier to mine. When it becomes easier to mine, it becomes more profitable at lower prices. And when profitability improves, more miners are encouraged to come back online. It is a self-balancing system. Pressure builds, the network adjusts, and incentives realign. That is the mechanism at work behind the scenes.
Can you help us with one thing? There's some folks in the community, the Bitcoin community, that believe that there's a floor on Bitcoin at around $60,000 because that is the average price that is effectively or cost, I should say, for miners, and that as a result, the arbitrage will always be around that price. I don't know if you think that's true or not, or whether you think there's a possibility that you could fall below that, in which case, what happens to those miners? Obviously, for Bitcoin to be successful in this sort of decentralized world, you need the miners to be mining. Otherwise, the whole thing doesn't work properly.
If you're focused upon the price dynamics of Bitcoin, I think it's much more interesting to look at what the banks do, because as the large banks roll out credit against BTC, and you see a lot of enthusiasm from Citi, from Schwab, from JP Morgan, from BNY Mellon, et cetera, as they roll out credit, they're going to negate the miners' influence by a factor of 10. Also, the embrace of large Wall Street firms, the rollout of the next BlackRock Bitcoin income fund is going to have a big impact. And of course, the growth of digital credit that we're issuing. We sold $7 billion last year. We sold $400 million in a few weeks this year. So the issuance of that credit on top of that network is going to be 10x the price impact of anything that the miners do or don't do. They're really a third order effect.
Most of the Bitcoin that will ever exist has already been mined. There will only ever be 21 million coins. That supply is permanently capped, and we are already approaching 20 million mined. So ask yourself this: how much influence do miners truly have today compared to the early years? They are still important. They still secure the network. But their impact is not as dominant as it once was. In the beginning, miners controlled a much larger portion of new supply. Now, new issuance is smaller and the game is evolving. This supports the idea that the power dynamic is shifting. The spotlight is slowly moving away from miners and toward institutions. Large financial players are beginning to use Bitcoin as collateral. They are integrating it into the traditional financial system. And that changes everything. Because when institutions step in, the scale becomes completely different. Now here's where it gets even more interesting. One of the world's most influential credit rating agencies has signaled that Bitcoin is being viewed as global collateral. And when a major credit authority starts recognizing Bitcoin in that way, the message is hard to ignore.
And then as that technology becomes more embedded, for that to expand across other asset types. We do think there is a link back to crypto assets and Bitcoin in particular. Bitcoin is starting to emerge as an asset that can be used as collateral in financial operations. So a few hours ago, we just published our first rating on a Bitcoin loan-backed securitization. So where underlying borrowers are borrowing against Bitcoin collateral, over-collateralized, and with liquidation thresholds at maximum loan-to-value ratios. And that's really a new use case for that asset in...
Let's be real for a second. Bitcoin absolutely could drop from here. Anyone buying at these levels might see a better entry point in the coming months. That is always a possibility in a market this volatile. But at the same time, what if the bottom is already in? What if the recent lows were the final shakeout? The truth is, no one knows for sure. Short-term price action is unpredictable. It can move on fear, headlines, or pure emotion. But when you zoom out and look at the bigger picture, the long-term case becomes harder to ignore. There are strong reasons to believe that Bitcoin, Ethereum, and other high-quality crypto assets could be significantly higher over the next decade. Adoption is growing, infrastructure is improving, institutions are stepping in, and the narrative around digital assets is evolving. So yes, volatility may continue, but the long-term trajectory could look very different from the short-term noise.
Now, what do you think?
You know, I don't really make predictions over 12 months. I think the Bitcoin is going to double to triple the performance of the S&P over the next 4 to 8 years. And I think that's the only thing we need to know.